I have some slides that will dwell on the strengths of the real property market, what's underpinning its sustained growth. You have favorable demography, fueling by massive urbanization, growing consumer demand, competitive rental rates in both office, retail, industrial parks. But again, we have to ground you. No? The foreign ownership limit on land continues to cap the country's participation in the explosive growth of global investment in Asia Pacific real estate region. And the gist of the report, we will be distributing this after my talk, is that there's a lot of optimism, a lot of excitement going on, and the party is not yet over, no? In a manner of speaking. The Philippines also is among the cheapest in Asia Pacific when it comes to office rent. On average basis, $20 per square meter, same as Bangkok and Bangalore, and vastly lower than the more expensive cities of Hong Kong, Beijing, Singapore, that hover in the range of $85 to $135 per square meter. And Manila is a location that can no longer be ignored by multinational offices, headquarters, and factories. Office rental in Manila has grown 5% yearly up to first quarter this year. And this is projected to be sustained and to hit potentially maximum of 8% by second half of this year. That's faster than Hong Kong, Mumbai, Shanghai, and Sydney. So a great opportunity as far as rental business is concerned for the country. And then I think this is the theme that you will be hearing the whole day. BPO call center would be driving further growth of property business, demography, and if I may just add, the next big thing is tourism. And I think I have a slide here that will show you the room gap that the country needs to produce in order to accommodate the growing number of tourists visiting our country. But I think the biggest changer of all is the ASEAN economic integration, which was mostly the topics last week. Manila hosted the ASEAN Financial Ministers Forum last week, and the WEF, which is the World Economic Forum, and the resonating theme are the benefits of the ASEAN economic integration. I think that is a game changer that will further drive growth in the property sector, because you will see a lot of locators coming into the country, both in the manufacturing space, headquarters, and offices. You will see a lot of brands, consumer brands, coming into the country. To name a few: Old Navy, Hotstar, Pull and Bear, Vero Moda. They're all gonna come to the country, put up their presence here, and all of these will need real property spaces. Okay, this is a slide that will prove to you that the Philippine banking system continues to be supportive of the real property sector. Bank lending for this sector is still strong, with a CAGR of 20%, and it is growing healthily at a double digit through the last 3 years, 2011, 2012, and September 2013, which is the latest data available. And then on top of this, investment banks like us are also very active in helping real property companies directly access the capital markets by way of issuance of corporate bonds, corporate notes, syndicated funding facility. To name a few, Ali is an active issuer in the Philippine capital market, SM, FLI, Rockwell, Federal Land, to name a few. So in addition to resources that they can access from the banking sector, they can directly now hit the capital markets either through debt or through equity. In the equity space, our pipeline is quite healthy. There are a lot of property companies that are going to either go IPO, initial public offering, follow-on offering, listing by way of introduction, also to access the abundant resources available in the equity capital space. And well, just a quick snapshot. I'm sure there are real property experts here, but basically this slide shows a ballooning backlog in terms of housing units for the Philippine economy, particularly in the socialized, economic, and low end sector. I think if you total all this up, this is somewhere between 3.5 to 4.8. The next slide here, 4.8 million backlog. And this translates on annual demand of 250,000 housing units on a yearly basis. Of course, the largest demand is in the economic segment, which pricing threshold is around 401,000 to 1.25 million pesos. Office space, inventory of office space in Makati is likely to plateau due to lack of land. But development is seen outside Makati to meet demand of BPO sector. Approximately 1.2 million square meter of office space will be delivered outside Makati CBD from 2014 to 2016, with Fort Bonifacio increasing its office space by 43%, by 2016 to 1.3 million square meters. Other locations that are fast rising as an alternative to Makati and Fort Bonifacio CBD are as follows: Mandaluyong, Quezon City, Pasay City are identified as attractive alternative locations. Approximately on an aggregate basis, they can potentially produce 350,000 square feet of office space moving forward. Okay, what's underpinning from our view, a very sustainable real property growth? Number one, of course, is the robust macroeconomic environment. Last year, the Philippine economy grew at 7.2%, which is the second fastest in the region. The only country that was ahead of us is China, 7.6%, if you believe their statistics. No? But and then, well, today, first quarter GDP came out with a bit of disappointment. The consensus is 6%. It came out at 5.7%, and primarily the one that pulled it down was slowdown in public expenditures. This is probably the fallout of all this misuse of government resources. So I think many government agencies are somehow slowing down in public expenditures. But we see a strong rebound by second quarter. Although the flip side of a slower GDP is that the Central Bank of the Philippines, which is the monetary policy making body of the country, may reconsider their policy tightening stance, and therefore it may revert back to an accommodative policy stance. Therefore, we are pursuing we are looking at a potentially protracted low interest rate environment, and that will augur well for real property development. This year, we're confident that the economy will grow at least 6.5, even 7%. And looking at specific regions of the country that will continue to grow very well. Central Visayas, the regional GDP expanded 6.8% in 2011, and we expect it to grow by 9.3% in 2012, which in 2014, which is even higher than the national GDP. Northern Mindanao, Cagayan de Oro area, 5.8% in 2011, 7.4% in 2012. Tapish, 7, closer to 8% by 2014. Zamboanga Peninsula, Pagadian area, 0.1% in 2011, but a big rebound in 2012 at 12.4%. Western Visayas, Iloilo, the Bacolod area, 6.2% in 2011, 7.5% in 2012. And Central Luzon, which is less than an hour travel from Manila, they produced 7.1% GDP growth in 2011, and expect to grow somewhere between 6.37% in 2012. So the party is not just happening in Metro Manila area, but if you drill down on certain progressive regions, these are also the places to potentially go for property business and development. Consumption and OFW remittances will remain as key growth drivers. The Philippines, as we speak, is now being supported by by twin engines of growth. BPO call center, which is producing somewhere 16-18 billion dollars in gross revenues annually, and then you have an OFW engine that has been growing at 10.7% annually on an aggregate basis. It brings into the country around 22 up to 24 billion dollars of inflows. So you have this twin engine supporting a very strong consumption environment, consumer spending, purchase of condominium, housing, and other related expenditure. I was recently in Davao because I'm buying a hardware chain of store for a certain taipan in the country. And there is this hardware store in Davao. So I sat down with the owner. I'm trying to investigate how much money did he earn last year, and I almost fell off the chair. No, he said that our gross revenues last year was 20 billion pesos. No, it's a hardware in Davao. They're not operating even in Luzon. They're just operating in Visayas and Mindanao. And said, oh, what's driving your enormous sales? Said, the BPO call centers. So they're in Cebu, they're in Davao, and a lot of people are buying construction materials. Either they're repairing their homes, building apartments, repairing their houses. So as I've said, the activity is not just concentrated in Metro Manila. It's happening outside and in other key regional centers of the country. BPO, as I've said, of course, the argument is that is BPO going to be a fad thing? Meaning we're number one right now. What if other countries will take this over from us? I think the next slide is an argument that BPO call center will be a sustainable industry as far as Philippines is concerned. We talk about wages. The left-hand quadrant. Thailand is more expensive than us, 153.8 US dollars on a monthly basis. Philippines is 136. Indonesia is 119. Vietnam is 42.4. No, very low in wages. But the other important factor, of course, is the ability to speak English. This is a business English index by Global English Corporation. So they track the proficiency of different nationalities as far as speaking that language is concerned. Look at the Philippines. The index is 7.95. It's sorry for the Americans and the British here. No, Philippines rank very high at 7.95%, even higher than the British, 6.81. India is 6.32. Indonesia is 5.57. Sorry if there are Americans here. No, the rank is your rank is only 5.23. And then Vietnam is 4.61. The legend is there. 0 to 3 is beginner, 4 to 6 is basic, 7 to 8 is intermediate, 9 to 10 is advanced. So this is the main resource that we offer to this particular industry is the human resource, talented, multilingual, highly skilled, and this will continue to underpin on a very sustainable basis the growth of our BPO and call centers. Now, Vietnam, very low in wages, but I think you need, if you run a call center, then you need a translator. So, wow, I mean, hiring 2 people, the Vietnamese employee and the translator, so that will just double your cost. So we are very bullish. Of course, the OFW's phenomena is also an irreversible thing, as far as we in the finance sector is concerned, because as the Philippines continue to enjoy what we call as demographic dividends, elsewhere the developed economies are experiencing what we call, which is the converse, the demographic winter, aging population. So they will continue to need and require talented young labor force that will man their economies in order to sustain its growth. Even China, with their one-child policy, very simple arithmetic. If both parents die, then it's effectively halving the population of China. Then how do you run an economy as big as China with just 50% of the population. Japan, of course, we all know for a fact, is also experiencing demographic winter. So I think our best exports now are the talented labor force, no? And no longer the physical and tangible goods. And if I may stress, no, we believe that this is irreversible, and this will continue to underpin the country's growth and will fuel consumption and other related expenditures. Well, basically showing you that the Philippines is betting on tourism as the next big thing. The government targets to attract 10 million tourists by 2016. The government allotted 5.5 billion for tourism sector this year, 2014. And there's a pressing concern, second column of the right-hand quadrant, demand room in 2016. You can see that Northern Luzon needs 80,000 rooms, Central Luzon 82,000, Southern Philippines 20,000. And then room gap in critical destination clusters, Northern Luzon 16,000, Central Philippines 20,000, Southern Philippines 570. Manila, Cebu, Panglao, Bicol, and Cordillera will need the most number of rooms by 2016. As we speak, a lot of investors are coming into the country. They're putting up resorts, boutique hotels all over the place. There's a group of Filipinos that have partnered with Xinjiang, China. Xinjiang, China's claim to fame is that they were responsible for 40 million outbound Chinese tourists last year. The local Filipino group here, led by Carlos Chan of Puwishi Group, as we speak, they're putting up resorts and boutique hotels all over the country. Our group, Metro Bank Group, are putting up a 6-star luxury hotel at the Fort behind the Lexus showroom. Hopefully, it will be completed by 2015 for APEC. President Obama already confirmed his staying in our hotel. By the way, we're also partly funding the Shangri-La, which is also rising in the Fort. We wanted to be completed first, Grand Hyatt, so we're slowing down the loan release to Hyatt, to Shangri-La rather. So a little bit. So the Grand Hyatt will be completed ahead of Shangri-La. Business. Okay. Aside from tourism, BPO, OFW remittances, there's a renaissance, resurgence of manufacturing in the country. In 2010, this particular sector expanded by almost 8% compared to a 3% annual growth between 2000 and 2009. Every week, me and my team, we have to meet 4 or 5 Japanese potential locators to the country. If you visit all our export and industry zones, they're all filled up. And the list is getting longer. I've just spoken to another group from a conglomerate, manufacturing conglomerate in Japan. They wanted to put up their own industrial zone. They're asking us to look for a 300, 500 hectare property which they can create just for their own use, because they went around the country and almost all the zones, industrial sites, have been filled up already. This manufacturing industry are into food, chemicals, furniture, fixtures, radio, TV, semiconductor, communication equipment, and electronic apparatus. The reemergence of this sector reflects the country's rising disposable income, robust construction growth, and expansion of telecom companies such as Globe, PLDT. This group alone allocated 30 billion in capex last year, and almost the same magnitude for 2014. Just a quick snapshot of the favorable demography that's supporting the country's sustainable growth. 60% of the population is in the working age bracket, which is ages between 20-24 all the way to 60 to 64. and the number of household increases by around 500,000 every year. So you have a situation where the population is young, dynamic, growing in terms of economic affluence, rising purchasing power, and consumption capability. All of this will drive the economy stronger forward on a very sustainable basis. Okay, we will be doing you injustice if what we will just be telling you are all the good news. No? So here are some of the downside risks that that you should be concerned of. Number one, the U.S. economy is slowly gaining economic traction. If you will listen to Yellen, on a broad-based basis, I think the recovery is on the way. And that will, on a translation to monetary policy basis, that will probably lead to a higher interest rate environment, beginning from U.S., and then eventually that may reach also the soils of emerging markets like Philippines. I think they made it very clear already. The Fed said that the Fed raising interest rate policy may happen by mid-2015. The countenance to such a interest rate policy move by a developed economy like US is that in the Philippines context, our inflation remains to be non-threatening and benign because our central bank is into inflation targeting. They look at the inflation behavior and then accordingly they adopt monetary policy by way of an interest rate tool policy in order to contain runaway inflation. So the bad news is that U.S. rates may be rising soon. The good news is that in the local economy perspective, I think we have a lot of elbow room not to follow suit any policy rate increases in U.S. because of a very benign and non-threatening inflation. Plus the fact, of course, that the economy of the Philippines is awash with so much liquidity. I heard Charlie talking about the SDA deposit with the Bangko Sentral ng Pilipinas. The total magnitude of the deposit is around 1.4 trillion pesos. You know, the total PPP price tag of the country is only 800 billion pesos. So, I mean, that money parked there collectively by the banks is more than twice can finance the PPP program of the national government. So, in that sense, I think we should be comforted by the fact that the low interest rate, the low inflation environment plus abundant liquidity in the system will continue to support a low interest rate environment for the economy. And of course, these are some of the risks that we must be vigilant of. Number one, the currency. You know, the Philippine peso currency is like a political commodity. You know, if it weakens to say 45, well, you have all the oil sector and people that are importing goods raising their arms, no, and clamoring that the Central Bank of the Philippines intervene. Of course, on one hand, you have OFWs jumping up and down because this will translate to more pesos for their dollars. Therefore, their consumption behavior will be sustained. And if the peso appreciates to 42, of course, OFW will complain, the exporters will complain. So it's a very challenging monetary policy task as far as central bank is concerned because they have to strike a well-crafted balance, no, as far as foreign exchange level is concerned, so that on a broad basis it will be favorable to the entire economy. And then, of course, the rising power cost. I think we're the ninth highest in the world, second in Asia. And by 2016, I think it's all over the papers, a power shortage will become more and more pronounced. Now, I think as we speak, the power situation in Mindanao and Visayas are in terrible shape. I think they're experiencing what they call as rotating brownouts. You know, the technocrats, they like inventing very technical terms. So rotating brownouts, it only means one thing: there's no power, no? but they present it in a different way. But as we speak also, there are a lot of private sector companies, including us, Metrobank Group, no, that's into power generation capacity building. You have Aboitiz, Alcantara. Alcantara is a building in Mindanao, a 500 megawatt power plant. San Miguel, I heard, is also doing the same. Aboitiz, 750 megawatt in the Visayas, another 500 megawatt in Cebu. Our group, in partnership with Meralco, we're expanding our power plant capacity in Panay and also in in Cebu. By the way, our group is the one that supplies power to Boracay. So if there's brownout in Boracay, I hide from my friends because they will complain. And then, of course, the depleting talent pool. This is the negative side of exporting talent and labor to the world. This may lead to eventually a shortage of talent in the country. So I guess the biggest takeaway here is, if I may reiterate, the ASEAN economic integration. For me, to many of our policy thinkers, this would be the greatest game changer of all. The ASEAN on an integrated basis is, I think the population is 600 million. And so it is like a huge market potential. And then the GDP on an aggregate basis, I think will be as large as UK and Brazil. And by 2020, the GDP collectively of ASEAN will be as big as Germany. So we're betting so much on this economic integration, and I think the property sector will also benefit from it. And then the other advantage of the ASEAN economic integration, if I may just say for my final point, is that practitioners, property practitioners, bankers, investment bankers, traders, equity brokers, they will be now allowed to practice their craft, their set of skills in the entire region. So you will see a lot of mobility, a lot of cross-posting, and that will require a lot of real property requirement. I'm just asking one of the policymakers, can we also cross-post our politicians? Can they also practice their trade elsewhere? I think that's going to be a big problem. What if Thailand send their politicians here, and we will send their politicians? I think that will resort to more chaos. Okay. On that note, good morning, everyone, and thank you, and have a nice day to all.